Alright, so welcome to Market Crest, where we focus on fundamentals for directional bias and then technical for our entry. This week, we have nothing much apart from the labor data that will be on Tuesday, and then we have the CPI from China Wednesday, and we have several governors speaking, and the labor data from Aussie on Thursday, followed by the CPI from USD, which is tentative, of course, until the shutdown is out of the way. No data is coming out from the US. Important data, actually. But then last week was a good one. But then Trump talked about imposing 100% tariffs on China. So the Aussie dropped and all that. Let's take a look at the Dixie on the monthly. It's quite clear that it's bullish, right? Let's just look at it this way. This is our break, and then this is our range, of course. So this has been an internal range play, and now we are at a lower low, expecting a lower high at least to 130. Price is reacting from this monthly demand, of course. And if you look at it from the weekly, we have our break to the downside. So this was our last range, and then I'm expecting the market to not close below these points, then it goes to the upside. But if it doesn't, and then it continues breaking, fine. Fundamentally, Dixie is still bullish. It's very strong. It's very strong apart from the labor data. Inflation is still high. So this is the range, and the internal range, this is what we do have. This is our last range. There is a gap somewhere in this point, which I expect to pull back here to probably go to the upside. But if there is no pullback and price just push from this point, yes, you see Dixie long because it is actually demand. But I'm not looking at it from that perspective, but I'm looking at Dixie a little bit strong. And for such reason, I have my NZD short. So it was a beautiful shot last week, but then if you look at it on monthly, it's bullish, bearish to the downside. Look at the daily, price reacted at off the monthly supply, of course. And then what we're seeing here was that there is a bearish candle on the weekly. So the 4 hour supply is going to be good. But then this is the zone somewhere above 0.57. That's the area we're looking for shorts. Is it in line with our daily supply? Something like that. So 1 hour supply is a 1 hour supply there. Yes, we do have 1 hour supply here. Can we consider this liquidity? Probably, probably yes, probably no. It all depends on how you read the market. So if there's a short somewhere there, and don't forget this 0.57 is the area looking for short, so price might just drop from this. This is the confirmation. We have our GU, which it's equivalent the same thing. Looking at this, I really know we know this is down. It's going to the downside. We're looking at price getting to 1,300. So um, let's just look at that. Approximately 300 pips from current price. So if we go to the daily time frame, there's a supply here. So this is the supply we're looking at for price to short. Why? Because we are already bearish. You can see the range already marked out. And then modifying that is up to you. But I expect price to look at this 1.34 area. But this, I look at this as liquidity. This should be liquidity. So that should be liquidity. You can work with that this week. So those are very high probability zones. Sorry, pairs. Then USD card looks quite good too on the weekly. Yes, I told you we will be looking for longs. On weekly, price actually reacted from a daily demand, which was this point, which it did not break. I looked for my longs, and now I'm looking at this D1 demand. Now, so this should be where there should be a rally to continue to upside. Uh, BTC, a lot of people have been looking at BTC. Alright, so a lot of people have been looking at BTC the wrong way, saying it's bullish. Of course, there is this imbalance here at 95k. So I'm looking at price going down. There was a doji, sorry, this rejection candle to the downside or rejecting to the upside. So a lot of people will be looking, oh, there's a grab of liquidity. I see it as a break of structure. So here's what I'm saying. Let's look at price a little bit. This was high. This was a break of structure. So we're looking to short. We wanted to short. That this push fell to close below, went higher, very, very high. And now, so this point was the point that buyers came in, but now it has been taken up by sellers. I don't expect buyers to push this price higher. No, I expect price to hit to 116 or something like that and just sink all the way to 96k. Yes, of course, it is reacting from this 103 demand. Of course, it has to, but then it's bullish. It's bullish overall, or it's bearish. Now, why is it bullish? If you look at this, this is our high, this is our low. This is now what we call our high. So we are looking for a low, which we have this demand zone here, and we have this extreme. Yes, so prices have to get to those points. It's just very simple. And that's it for the dollar pairs. Aussie is quite interesting in a sense. We already know Aussie is bearish. This is a downtrend for us. So this is the range we expect price to hit to. It tapped our supply area, but it hasn't broken structure to the downside. But internally, let me clear all this. Internally, we have this point, okay? So if there is a reaction from this demand, it should be a pullback from here to short. So there is absolutely nothing here. But of course, price might just pick one of these zones to react from. If we look at it from the weekly, there is a space here, somewhere around here. So that's it for the dollar pairs. Then remember, we are actually weak on Aussie, so Aussie Swiss is actually beautiful. Looking at this, it's bearish, and then it's that broken structure to the downside. We're looking at price pushing back up to this one 0.52 area to short. Now look at this. This is where I expect if price comes up here, I should see my probably 1 hour time frame change. Then you can short. Aussie yen is equivalently the same thing. This short was actually nice. Why? Because if you look at this from the weekly, we have a weekly supply. It was a perfect weekly supply. That is structure. So that is structure. Are we expecting price to hit to this point? Probably. That's what we're looking out for. Going to this structure change. This is our range. This is our range. But I don't see any fundamental reasons why it should start doing that. I don't see anything yet. Probably by next week we might see something, but probably the safe haven effect and the dollar China weakness is causing this. Of course, we can see that to the downside quite instantly, and then the yen should just do the same thing across the board if that's the case. But here it's quite different because this is this range. So you remember last week, but so we are looking for shorts from here at least to this point. If it's going to go to the upside, or it's just going to take out this zone. The same thing with the Swiss as we've been looking at it. So I expect a pullback here to continue short up to this demand. But if the safe haven still continues and we have these trade wars between China, you say yen might be a safe haven that will do such. And then this Aussie, Euro Aussie, looking at market going to the downside, right? This short was actually nice. Let's look at okay, let's look at this. I look at a short here. Why? Because this range is bearish. Yeah, this is this point. But if there's a short here coming here, we have a fundamental reason, so we might just keep longing. But apart from that, I don't think I expect to see anything much from there. And then the Euro card, which we talked about last week, we have this weekly demand, of course, weekly demand, it's got daily, and then on the 4 hours, we had a very beautiful um zone. Yes, there was a liquidity graph here, of course. So this is a very powerful demand. If we could get a pullback here long up to this point at 163,500 area, why? It's because if this is our range, right? This is our range. This is an internal pullback to continue, but if this is actually a breakout structure, then this is the zone we expect not to hold. The euro Swiss, yes, to the downside, it's quite going down. We just need to short it when we see if we could get price as high as 93400. That's a good short area, but it might also short from here. Um, the euro NZD was a nice one last week. It was like a ping pong. Waiting to long, but at this point, and now we have this breakout structure to the upside. On the daily time frame, look at this, it's bullish, right? So this is call this a daily push to the upside. On the monthly, it's bullish, so it has to continue higher. On the weekly, it has to continue higher too. The question is, where are you buying it from? You either wait for price to push higher and then create this point as a demand, then you know, or we have the GA, it's equivalently the same thing. So why am I looking to, am I looking at, look at this, we've been bearish, right? We tap this point, push to the upside. That's the point on the monthly that we've been looking at. But I expected price to come to a deeper point. So if we can't see anything here, we'll be looking at shorts. Where is the shorts? This point is 2.07 area. That will be where we'll be looking for shorts. Now, the reason why I'll be looking for shorts, apart from the fact that Aussie is weak, we have this range. We have this range. So if it's going to be a short, it should be from here. And if it wants to continue long, it does that. Like pound Swiss. The pound Swiss is to the downside as everybody else. Um, going to 4 hours, tap our zone, push down, broke the structure. So this is now a range we've got. Expecting a push to any of these zones, then we can just take price on the downside. GN looks good too. It was a fantastic one for the week. Expecting price to head up to that 2.36 area. Previous weekly candle is a bullish candle. Looking at 4 hours, we have nothing. Looking at daily, look at this. We had this high, a low, a high, a low, a high, a low. So this is we're expecting price to continue higher. This is a bullish candle on the 1 day. So this would be a very good long area if it will hold the continue price higher. It's just plain simple. And then you can look at end card. It's actually okay. Card ends with the weakness coupled with on China issues. So at this point, as a weekly supply candle, going to the daily, we have the D1 supply day. Look at this. So any push up here, you should be looking for a short. And with this Swiss, it's equivalently the same thing. So NZD Swiss, this was where I was looking to be able to push price higher. But unfortunately, uh, it's a dead one. Bad loss. And then this is pullback to shorts. Now this is due to the fact that China is having issues and the NZD cuts or surprise cut of 50 basis points last week. So all this is inside. The yen is there but not of concern. And that's all we've got for the week. That's all we've got for the week. USD China. Um, look at this was price expecting price. This is our range, of course. So this was a break. I talked about price coming deeper and it went in here and expecting a push higher. Now to at least 7.718 on the monthly time frame. The monthly we look at this. There's an imbalance there that has to be filled, but also we had bearish monthly supply. Looking at it on the daily, so at least 1.7 7.17 area first before we talk about so let's stay safe.